Hello and welcome to Gold's Perfect Storm. I'm Anjali Desai, and today we're diving into a story that, honestly, feels more like science fiction than finance at first glance. Gold's price has shot up 27% in early 2025, and everyone's talking about the markets. But let's rewind way back, billions of years actually. Gold isn't just dug out of the ground. It's born in the most violent events in the universe. Neutron-star collisions. I mean, it's wild, right? In 2017, scientists finally confirmed this with gravitational waves. So every bit of gold on Earth is quite literally stardust from cosmic explosions. And here's the thing. There's only about 200,000 metric tons of gold above ground. That's it. All the jewelry, coins, central bank vaults, everything. To put it in perspective, that's less than the steel used to build a single skyscraper. Central banks hold maybe 16 to 20% of that. And below ground? Only about 54,000 tons are even economically viable to mine. The rest is, well, just too expensive or impossible to get to. Speaking of expensive, mining costs are no joke. About $446 for just 10 grams. So even if demand goes up, supply can't just magically appear. Cheap gold is, honestly, a thing of the past. I remember visiting the Royal Mint in Wales a few years ago, seeing those gold bars stacked up. It hit me how much effort, history, and, well, cosmic luck goes into every single ounce. From star collisions to global vaults, it's a journey that makes you see those little coins in a whole new light. Now let's bring it back down to Earth. Well, sort of. The US is facing a debt refinancing crisis this year. $9.2 trillion needs to be rolled over in 2025 alone. That's not a typo. Over the next 4 years, it's $28 trillion. And I always get these numbers mixed up, but I double-checked. Annual debt payments are now close to $1 trillion, which is actually more than what the US spends on defense. That's kind of mind-blowing. What's happening is, foreign buyers, China especially, are pulling back. Since 2022, China's cut its treasury holdings by 27%. So there's this foreign buyer strike, and the dollar's role as the world's reserve currency is, well, not as solid as it used to be. The dollar's down 7% since all these trade tensions started, which is weird because usually when things get risky, people run to the dollar. But now they're running to gold. Inflation fears are back too. Tariffs are acting like a tax on everything, pushing prices up by maybe 0.7 to 1%. That creates this stagflation risk. Slow growth, rising prices. The Fed wants to cut rates, but inflation might not let them. It's a bit of a policy mess, honestly. And if you look back, gold has always spiked during crises. The Iran hostage crisis, the Soviet-Afghan war, you name it. It's like whenever the world gets shaky, gold gets shiny. And, as someone who watches emerging markets, especially in Asia, I can't help but wonder, how does this US debt spiral affect countries like India or Indonesia? If the dollar's not as safe, do we see more capital flowing into gold? Or maybe even other currencies? It's a big question, and I don't think anyone has a perfect answer yet. Let's talk about the big players, central banks. In the first quarter of 2025, they bought 244 tons of gold. That's huge. And 95% of central banks say they're planning to keep adding to their reserves. The BRICS countries, Brazil, Russia, India, China, South Africa, they're leading the charge, making up 60% of those purchases. It's not just about diversifying, it's about reducing dependence on the dollar. China, for example, is building up gold reserves and making it easier for people to buy gold at home. It's a long-term play for stability and maybe a bit of de-dollarization. But here's where it gets tricky. The gap between paper gold and physical gold is getting wider. Some estimates say there's a 100.1 ratio of paper claims to actual physical gold. So for every ounce of real gold, there are 100 ounces promised on paper. That sounds, a bit risky, doesn't it? In times of stress, if everyone wants to cash in, there just isn't enough physical gold to go around. That's why premiums for real gold have shot up, and futures prices are all over the place. I want to bring in a quick case study: India. The Reserve Bank of India has been steadily increasing its gold reserves, especially as the rupee faces pressure. For a country like India, with a long history of gold as a store of value, this isn't just about tradition. It's about resilience. Other developing economies are watching closely. If gold demand keeps rising and the paper market gets shakier, countries might rethink how they manage their reserves. So, to wrap up, gold's story in 2025 is about more than just price charts. It's cosmic scarcity, yes, but also debt, policy, and a world that's rethinking what safe haven really means. We'll keep following this journey because honestly, I think we're just at the beginning of a new era for gold. Thanks for listening, and I'll see you next time as we dig even deeper into the forces shaping our financial future.